Hello everyone. Today want to go. Want to look back on my investment experiment investing. We see today price is $91. So when we bought it, it was $82. In May it went to 97. And in June it went down to $60, and now today it went to $91. So now we make $4,200. But like in May we actually make $6,000, so it still have way to go. But my prediction is at the end of this month it might go to 94. Because today it already hit 93 today. And so it might be at the end of the month it might go to 94. And at the end of next month might be go to 99, and at the end of the year might be 105. But Kashi prediction it's a $100, like over $100 only 48%, over $90 55%. So Kashi prediction say it around $99. But because I'm increased this to 105 just because the price is already 90 already today, so 90, 91, 92 already. So but like to break out of 100% is harder, because $100 per share there's psychology resistant over there. So when it break through it might go up more. But now it's 91. It's good. I'm kind of complaining because just couple days ago I was losing 1,000, and then I gain 1,000 the next day, and then I gain to 2,000, and today I gain 4,000. So this couple days really a good day, and I'm really happy about it. However, it's a risky asset, so the price is so volatile, it can go up and down. And I might planning to sell some, because when it was 79 I bought about $200 worth. When it was 82 I bought $2,000 worth. So I'm planning maybe just sell $1,000, just get the profit a little bit, just in case it coming down. At least we make some money along the way. I might do that, just sell me like $1,000 or $2,000 for now, and we'll see how. I will let you know if I decided to sell. And the stock market today is doing really well. All of these are low risk assets. PKW, it very safe. Like the movement is very slow, and every day it gain a little bit, and it gain, even though it gain a little bit every day, but like accumulate for month, for year, it's a lot of gain. And S&P 500, it was up earlier, and now it was up $0.43, I guess, before the market closed. But now I think post market it coming back down. Dow Jones Industrial up about 1%. S&P 500 when it closed it up 0.43%. Nasdaq Composite 100 up 0.43%. Gold up 2.39%. Oil went up 0.29%. In one day, look, yeah, it was 85 or something, and now 87. S&P 500, oh, I look 5 day, but today it actually gained 0.43%, 0.98%. Dow Jones Industrial 0.43%. Nasdaq Composite Gold went up almost to 4,700. Oil went up. SpaceX today also went up, right? Yeah, SpaceX also went up today from 132 to 136. And this is the bad news today. Look like all the interest rate also went up. 1 month rate went up 1.5 base point. 1 year went up 3 base point. 10-year rate 3.5% base point up, and 30-year yield almost 3 base points up. So today is not really good day, but today the yield went up and also the stock price went up. That is like not usual. Usually, like when the yield went up, the stock also went coming down, but today a difference. And also this also went up too. Alright, let's see what we have in the news today. The deeper version of today. Top news Friday, August 21, 2026. Focus on what investors should actually take away from each story. 1. The US bond market is the biggest macro warning signal. The 10-year Treasury yield has moved back toward roughly 4.7 to 4.73%, and 30-year Treasury recently touched 5.34%, its highest level since 2007. Investors remain concerned that inflation, large government deficits, heavy Treasury issuance, and massive private sector borrowing for AI infrastructure will keep long-term rate high. Treasury Secretary Scott Bessent recently doubled some long-term Treasury buybacks to about $4 billion per operation, but the markets are skeptical because the government is expected to issue roughly $550 billion of bonds this quarter alone. Important distinction is that the Fed controls very short-term rates, but investors largely determine long-term yields. So even if policymakers want to borrow costs lower, borrowing costs lower, the bond market can resist. What I am watching below 4.7% increase bullish for stock, 4.5% to 4.75, uncomfortable but manageable, about 4.75, stronger warning for equity, toward 5% potential signal valuation pressure. Stocks are bouncing today, but the correction may not be finished. The stock recovered Friday after Thursday's sharp decline. At one point today, Dow was up roughly 0.9%, 1.1% to 1.1%, and S&P 500 about 0.4% to 0.5%, and Nasdaq Composite 100 around 0.3% to 0.5%. But Thursday were ugly. S&P 500 fell 0.9%. Dow Jones Industrial down 1.3%, Nasdaq down 1%, and Russell 2000 down 1.3%. Distinction matter. Today rally appear more likely a rebound after heavy selling than confirmation of a new bullish breakout. What encourages me is the corporate earnings remain strong. Roughly 90% of MSCI World companies had reported second quarter earnings through the latest data, with aggressive net income up almost 40% year over year among reporters. So we currently have strong earnings versus high interest rates. The battle will probably determine the next major move in stocks. Oil remains one of the biggest threats to the bull market. Brent recently traded about $90 a barrel, with Friday AP market update putting around 92.67. Gulf tension and uncertainty over Persian Gulf shipping remain major drivers. Oil matter because it fit into much more than gasoline. Higher crude rates cost for gasoline, trucking, airline, agriculture, manufacturing, shipping, consumer goods that can eventually fit back into CPI and CPI inflation. So this is the dangerous feedback loop. Iran Gulf tension, oil price increase, inflation increase, the Fed stay hawkish, Treasury yields increase, and stock decrease. That's probably the sign macro change I would watch most closely right now. The Federal Reserve may actually raise rate again. The July Fed minutes show that many policymakers believe higher interest rate could eventually be necessary if inflation stay elevated. The Fed held target rate near 3.6%, but the market no longer confident expecting cut. According to the market pricing site Reuters, trader recently assigned roughly 35% probability of September high, 66% probability of high by December. So this one like 3.5 to 3.75. This one like in the middle, roughly around 3.6%. Fed Chair Kevin Walsh's Jackson Hole appearance it therefore became a major market event. What is a dramatic change from the environment investor become accustomed to where weak market often cause traders to expect Fed cuts. Now the Fed has a problem. Inflation is still too high, energy costs are elevated, and the economy isn't collapsing. Therefore, the Fed has less reason to cut. Nvidia's August 26 earnings could move the entire market. Nvidia report earnings August 26. Normally, one corporation earning report wouldn't rank it this higher, but Nvidia no longer just another stock. It is effectively a proxy for whether enormous AI capital spending boom remains sustainable. Philadelphia Semiconductor Index falling roughly 5% this week, while investors question whether rapid rising borrowing costs could show AI infrastructure spending could slow AI infrastructure spending. Nvidia and major financial institutions are targeting more than $500 billion in AI infrastructure financing. There are two things I would concentrate on more than Nvidia earnings per share. One, data center revenue growth that tells us whether AI demand remains strong. Forward guidance: if management says demand continues to substantially exceeding supply, that would reassure investors that AI investment cycle remain intact. Weak guidance, however, could hurt not only Nvidia but AMD, Broadcom, Microsoft, Meta, Alphabet, Oracle, and many AI infrastructure companies. 40 trillion US debt is becoming an investor issue. Federal debt has grown $40 trillion, while annual federal interest expense now exceeds approximately $1 trillion. This doesn't automatically mean a debt crisis. The concern is trajectory. Imagine this simple cycle. The Fed deficit, Treasury issue bond supply increase, investor demand higher yield, federal interest bill rise, deficit get larger, more bond just be issued. Help explain why term premium investor demand to hold long duration Treasury have claimed nearly 12-year high. This is one reason I consider the bond market more important than most individual stock story right now. Walmart may be giving us an early consumer warning. Walmart's disappointing comparable sales number this week caught Wall Street attention because Walmart provides an unusual broad view of U.S. household spending. Meanwhile, Friday's market strengths include roughly 4.8 rise in raw store following strong results and improved forecasts. That combination suggests consumers haven't stopped spending, but they became more price sensitive. That's important. Rather saying the consumer is collapsing, I would describe the data as consumers are trading down and become selective. They're usually good for discount retailers and less favorable for discretionary business depend on middle income customer making optional purchase. Bitcoin is showing significant strength. Bitcoin moved about roughly $77,000 Friday at higher levels in May, while coined by Robinhood and other crypto equity rally. This particular interesting become crypto. This particularly interesting because crypto is rallying despite elevated treasury yield. Normally, higher treasury yields, speculative assets come down. Yet Bitcoin has resisted that relationship recently. That suggests crypto-specific force, particularly regulatory optimism and institutional demand, offset part of the macro pressure. For crypto investor, I would watch whether Bitcoin can hold a breakout rather than simply touch the new level intraday. If Bitcoin stays strong while Treasury yield remain near 4.7%, that meaning that there's a meaningful sign of underlying crypto demand. Gold is sending a warning about confidence and inflation. Gold briefly moved above 4,690 an ounce Friday, reached its highest level in more than 3 months. Gold strength is noticeable because several things are happening simultaneously. US debt high, oil high, geopolitical uncertainty increase, bond volatility increase, dollar weakness increase. That almost an ideal environment for gold. Gold is therefore function as both inflation hedge and fiscal and geopolitical hedge. I would interpret rising gold as proof that a crash is coming, but when gold, oil, and bond yield all rise together, I pay attention because it can indicate concern about inflation, fiscal credibility rather than economic growth. 10. Investors haven't abandoned stock. Money still flowing in. There is probably the most bullish story that being overlooked. Global equity funds attract approximately $22 billion through August 19. There's strong inflow in 3 weeks. Of that, US stock 11.72 billion, European equity 4.70 billion, Asian equity 2.96 billion, technology fund 1.55 billion. Bond fund attract roughly 15.42 billion. There are 20 consecutive week inflow. That tell me large investors haven't moved into panic mode. They still buying both equity and fixed income. So the present environment look like portfolio position and valuation adjustment. Then the beginning of a full-fledged financial crisis. So the area, sign, and my reading. corporate earnings strong, AI demand strong, Bitcoin crypto improving, equity flow strong, economic job resilient, consumer slowing, policy hawkish, the Fed policy hawkish, Treasury yield biggest risk, oil and inflation major risk, the federal debt long-term concern. My investing takeaway, I currently see bull market fencing a serious interest rate test rather than beginning of a confirmed bear market. Bullish case is straightforward. Corporation profit are good. Money continue earning, equity, AI spending remain enormous, and crypto strength show investors still have risk appetite. Bearish case is equal clear 10-year treasury near 4.7, 30-year above 5%, elevate oil price, and the possible of another Fed hike are still tightening financial condition. The number I put at the top of the screen right now is their 10-year treasury yield. 10-year treasury yield less than 4.5% is bullish, 4.5 to 4.75 caution, 4.57 to 5%, 4.75 to 5% bearish pressure, and bigger than 5 signal for market risk. For the next several sessions, I watch Treasury yield plus oil flow NVIDIA, the Fed together. The four probably matter more than the direct S&P 500 than almost anything else. The direct S&P 500 than anything else. All right. I think that's it for the finance news today, and for everything look like so right now went up even more. Now it went to 92. I might sell some of my position just to get, like, a little bit of profit, a little bit, because I think the last time I bought was 79. I bought about 400, and then when it was 82 I bought about 2,200 and 2,000. So I can sell 1,000 and get a little bit of money, about $10, about 10% increase. So I might just sell $1,000 and get some profit for now, just in case coming back down. So I have the dry powder just in case it coming back down. All right, everyone, thank you for watching. I see you in the next episode. Bye bye.